to the dispute. Joining us now, Douglas Holtz-Eakin. He's the president of the American Action Forum and Economic Policy Center. He's also a former director of the Congressional Budget Office. Douglas, fantastic to have you with us. There's clearly a lot of noise, some of it conflicting, coming from the G7 on trade here. What specifically are you listening to here, and are you comforted by the noises that we're hearing?
I'm not particularly comforted by today's rhetoric. You know, we've seen this movie before. The president's very attuned to financial markets, the stock market in particular. Friday was a very rough day, and it was unsurprising to me that he set out over the weekend to try to calm investors. And I think it's important to step back and look at the substance. The Chinese from the beginning have said, if you put tariffs in place, we will respond commensurately. And they've done that. And last Friday, they responded with tariffs on $75 billion with the same dates as the U.S. tariffs. And the president escalated in two ways. He compared Jerome Powell, the Fed chairman, to Xi Jinping, the Chinese president, and both as enemies, and he put in more tariffs. So when you get to the reality, we've got increasing tariffs on both sides, no particular progress on the trade deal, and I don't think any great reason to be comforted by the state of affairs.
You know, you made a great point on Friday of last week. You said that China chose to announce their response around an hour before Jay Powell was set to speak in Jackson Hole. That then precipitated an angry response, and you referred to that tweet comparing who's the greater enemy here, Jay Powell or Xi Jinping here. Do you feel like that was a strategic response by China, and unfortunately President Trump sort of fell into the trap?
I do think that's what happened. China's response was as expected. When they chose to do it, I thought was very strategic. The president has been very critical of the Fed in general. He has been particularly upset that they have not cut rates, strengthened the U.S. economy, and in particular financial markets in the midst of the trade war. He wants them to back him up and to basically have monetary policy driven by his negotiating tactics. The Fed, of course, has a mandate to look at the broader economy and is not going to do that. I think the Chinese are well aware of both of these things, and they decided that this would be the best way to respond by not only inflicting some economic pain, but inflicting a little political damage as well.
You know, one of the other things that came out of the G20 was the interpretation of the second thoughts. When the president was asked if he had second thoughts about the escalation of the trade situation with China, he said, look, of course I have second thoughts. And people suggested that perhaps he was thinking that he'd done the wrong thing here. And then the White House came out and clarified and said, no, actually, we regret not escalating further here. You get a sense that on both sides, everyone's afraid of showing weakness here. Do you think we're still underestimating how focused the president is here on tackling China at the risk of a weaker economy here? He's willing to sacrifice a bit of growth here, perhaps, to tackle China.
Yeah, I think it's important to recognize that throughout his career as a businessman and now as president, he is extremely willing to undertake risks, even to the point of being reckless. And I don't think you should underestimate his willingness to have the U.S. suffer some economic damage in the pursuit of trying to win this trade war. I think that's been true from the beginning. I also think it's a characteristic of this president that you can never tell what's an assessment of the facts and what's a strategic statement. And so you often get this situation where he says one thing, appears to contradict himself, someone in the White House is cleaning it up, and you don't really know if this is just part of the negotiating tactic or a genuine error. And it makes it very difficult for the Chinese in particular to figure out how to make progress toward a deal, because he keeps them off balance constantly. It's been a frustration of theirs from the beginning. For many days, they didn't even know who they were negotiating with, much less the demands of the United States. So this has been a difficult negotiation on both sides. It is taking an economic toll. I don't think that can be disguised. It's harmed the U.S., it's harmed China, it's harmed global trade and global growth, and resolving it should be the top priority, and resolving it quickly would be better. I don't think that's how the president views the problem.
You know, it's interesting. One of the barometers that we're using here is the stock market, both of the likelihood that a trade deal gets done. The weaker the markets go, the more likely the president will ultimately want to make a deal, but also for the U.S. economy here. And I do think it's important that we separate these two things. Would you agree with that? Separate the markets from the U.S. economy, because while we're seeing some weakness in housing, in farming, in the manufacturing sector, the bulk of the economy is the U.S. consumer and consumption, and actually that remains pretty strong here.
I think that's a crucial point. The president focuses a lot on the stock market. The president is the person many people take their cue from, and so you see a lot of attention on the stock market. But the stock market is not the U.S. economy. As you point out, there are pockets of weakness. The housing market's been in a slump for 2 years. We've seen agriculture and manufacturing harmed by the trade war itself, and they're near stall speed right now. But the remainder of the economy, and in particular the household sector, which is 70% of GDP, is in very good shape and has grown consistently at about 2.8% for 3 years. Unemployment is very low. Wages are rising. We even got another good report on the business sector today in the form of capital goods orders. So there is good news out there if you look past the stock market and the fluctuations it's suffered. And that's the thing that should matter for those worried about the 2020 election and a recession, for those worried about the capacity of the U.S. to keep the global growth going.
Yeah, such a crucial point. Douglas Holtz-Eakin, sir, thank you so much for joining us, the president of the American Action Forum.